Okay, good morning, boss. So this is just a short video. Let me explain how you're going to use the head and shoulder pattern if you spot it. So this sometime around May, I think. So yeah, as explained in those messages I sent, head and shoulder, there's a left shoulder, head, and then the right shoulder. Then if it's inverse, the same thing applies. So how do we trade this head and shoulder pattern? Now, most likely head and shoulder pattern, they are most likely reversal patterns. It can be continuation depending, but now let's just focus on the reversal. Now, as we can see in the previous, in the left side of the chart, the market has been in an uptrend, at least in a very good uptrend. So now got to a point where they make consecutive highs, but not pretty much consecutive highs. Now, what determines if it's a head and shoulder is the right shoulder and then your neckline. If you watch let me zoom out. The initial left was formed and then a neckline. You can see it works hand in hand with kind of a support. So the previous, in this case, the previous high of the market worked as a support. You get for the low after the left shoulder. Then the head, now from the head is the highest, the peak. Then the right shoulder. Now if you watch the right shoulder, uh, uh, um it respected that neckline. So this long red zone is a neckline, a very good neckline. So now some people would take this trade around here, but taking it here doesn't mean that it's a head and shoulder. Maybe it may be in a lower time frame, maybe it's triple top or something else. But then on this time frame H1, for you to be a head and shoulder, it must be complete like this. So the best way to take this trade is wait for a breakout. That's the best, but it's very slow. Wait for a breakout for this neckline, then put your trade and then take your stop loss around this zone. Then put your stop loss that's 150.1. You can take the trade immediately it breaks out around 149.75. Place your stop loss around there. Then at least TP should be maybe somewhere here or somewhere lower, depending. That's for the first run of breaking the head and shoulder. Is that here? Here. You see how it's expecting those zones. We get so, and if you watch that trade is a very good risk to reward ratio. Very, very good risk to reward ratio. So that's just it. Or you wait for the formation of the chart pattern, take the trade, make sure it breaks. Don't assume, make sure it breaks like it have broken. Some people might want to take the trade maybe within these places, but as you can see, it have not fully break, and it definitely is going to take your stop loss maybe if you have taken the trade. But then you have to make sure that your trade has broken. So you wait for the breaker. Like breakout is when the candle that closes after that particular, like, closes well, like it closes well. So it's within this candle. Now this one that doesn't have a wick, this one around there, call it a shift candle. So it's within that place you're going to take your trade and place your stop loss somewhere above. And if you see, your stop loss is not just is stop loss is highest few pips, and your take profit is going to be massive. So that's just a little about the head and shoulder pattern.